Hello, I'm Chris Flood, Chief Correspondent at ETF Stream, and I'm here with Jonathan Cleborne, who's the head of Vanguard for Europe. Hi, Jonathan.
It's good to see you.
Thank you so much. We're here at ETF Ecosystem Unwrapped, the biggest ETF conference in Europe. And John, you've just been telling the audience about Vanguard's plans to try and encourage more retail investing in Europe.
Yes.
Governments across Europe have made encouraging more of the public to try and take up investing an absolute priority. But you're talking about the savings to investment gap and the barriers.
Yes.
Can you tell us a little bit more about why people are reluctant to invest?
Yeah, so Chris, it's a great question. We see a couple things that are barriers. One is just helping people see themselves as investors. When you ask people, do you think about yourself as an investor? We so often hear that that's not the case. And so we have to do more to help, I think, people understand that investing is for them. So Vanguard thinks about that in terms of how we think about some of our branding and how we think about participation in things like the UK government's campaign around take the next step and invest, trying to make investing feel a bit more approachable and a bit more for people like them. The other dynamic that we oftentimes see is a barrier is just fear out of losing money. And
are people too fearful?
They are. We've done some research that has looked at this, and what we've seen is that if you ask the average Brit, how likely do you think you are to lose money if you're investing over a 5-year horizon? They'll tell you it's effectively a coin flip. They say 50% of the time I might have more, 50% of the time I might have less. Well, in reality, it's actually closer to 90% of the time that they have more, and only 10% of the time that they might actually be a little bit worse off over a 5-year horizon. So we've got a lot of work to do, I think, as an industry to just continue to help people see themselves as investors and overcome that fear that is so often present.
And financial literacy is a problem that governments want to try and address. This is again an area that you're interested in.
It is, and we try to tackle it in a number of different ways. Some of that is partnering with the government as they are thinking about financial education, financial literacy. Vanguard's developed its own financial literacy program called My Classroom Economy, and so we partner with schools around the UK to help them introduce the concepts of financial basics into the classroom, to really just try to help get students exposure to it as they are as they're earlier on, because we do generally believe that if you can get people exposed to the basics of investing, it doesn't have to be that hard. You just need to get the healthy habits started early, and I honestly think that's probably one of the bigger opportunities for many in the industry is to try to. There's all this talk about financial literacy, and that's important, but there's also a really important role for all of us to play to just try to make it less difficult to get started. And so whether that's giving people a little bit of help along the way, trying to help them figure out ways to tune out the noise, not be confronted by too much complexity when they're thinking about trying to open up an ISA for the first time, there's a huge role for all of us to play there.
And you were saying that really if the industry can be successful in attracting more retail investors, it's a tremendous growth opportunity. You had some very interesting projections.
Yeah, so we believe that if you just look at the amount of cash that is sitting in current accounts, idle on the sidelines, it is far, far in excess of what most people would need for a healthy emergency savings cushion. And so we believe that if you can just convince people to overcome some of the fear, to start to think about taking some steps towards getting invested for the long run, the opportunity for growth for the industry is enormous. And what we've seen more broadly has been that ETFs are a really powerful vehicle for introducing investing, because it's become synonymous with the idea of low-cost, well-diversified, broad-based products, and that's what people are increasingly looking for. If they're just getting started, it's a great vehicle for people to come into.
Because it's very straightforward for people to build relatively sophisticated investment portfolios with ETFs very simply.
Yeah, absolutely. I mean, you think about it, you can own all of the equities in the world in one or two products.
Yeah.
And have exposure to every market, all the different market caps, and benefit from the compounding growth that comes along with that. It's one of the things that's, for Vanguard, our belief is that if you can just build a well-diversified, balanced portfolio and then just not touch it, you're on a path towards long-term financial success. And ETFs are such a great vehicle to do that.
You also made some interesting comments about the responsibilities of the industry. I mean, we're seeing many, many more providers now trying to push into the ETF market here in Europe. We're seeing a tremendous amount of product proliferation. Yeah. A lot of very complicated products are being brought to market.
Yeah.
And but that is a concern for you.
I do worry about the product proliferation that can play out. Look, there are many legitimate investment strategies that are yet to be put into ETFs, or if they're in ETFs, they could be delivered at a more effective price point. So not all new product development is bad by any stretch of the imagination. Yeah. But I do worry that as more and more flavors and more sort of niche strategies come into the ETF wrapper, that the brand of the ETF could potentially become diluted. That if ETFs have largely come to stand for low-cost, well-diversified investments that are great for long-term wealth accumulation, that if you get too many slices and dices, too many more esoteric strategies that come in, that it will create more complexity that's going to stop people from taking advantage of it.
Now, Vanguard has built a reputation as an absolutely ferocious price competitor, right back to its very, very foundations.
Yes.
I mean, it has effectively helped to lower the average cost of investing across America.
Yes.
Can Vanguard do that here in Europe as well?
We do have that ambition. Vanguard's a unique company in the sense that it's structured a little bit differently than most other asset managers. We're owned by the investors in our U.S. funds, and so what we have really built is a firm that is effectively structured so that as you get greater economies of scale, you can return those back to investors through the form of lower prices. We've been doing that for over 50 years in the U.S. We're increasingly doing that now here in Europe as well as we get more scale within the European market. If you look at just what we did over the course of the last year, we had nearly $40 million in expense ratio decreases that will now compound for decades to come for European investors. And we're committed to continuing to do that as we get more scale in the products. We pass that back to investors, which only serves to increase their returns.
Yep. A lot of people in the industry are now looking at Germany as a potential model for how more retail investors could be drawn into the market. There's these new neo-brokers offering online services, commission-free ETFs. That seems to be very successful. Do you think that is a model that can be spread more widely in Europe?
We're really excited about the trends that we've seen play out in Germany so far. Historically, Germans and many in Europe have not had access to ETFs. They have not had access to low-cost investment products. And the rise of some of these digital platforms has really unlocked an opportunity for investors to come in and to effectively get into really great savings and investment habits. I mean, when you think about Germany in particular, the rise of ETF savings plans and the ability for somebody who's thinking about preparing themselves for the long run to come in, really the only decision they have to make is how frequently am I going to invest? And they get into really regular habits of saving and investing. It's been transformative, and you can see the rapid adoption that's been playing out in Germany. And what we're excited about is many of the firms that are offering these types of programs are now starting to expand their footprint across the EU. And so we're happy to partner with them and to try to help make investing more accessible for many.
Mm-hmm. Can I ask you an artificial intelligence question as well?
Yes.
Yeah, let's try that.
Okay.
There's so much interest in artificial intelligence at the moment. I mean, do you think that artificial intelligence can actually play a role in, again, the encouragement of retail investors, interacting with retail investors to try and help them on their journey?
It's a great question, and it's something that we're already starting to see. It's been honestly, it has far exceeded my own expectations for how quickly people would start to turn to tools like Claude or ChatGPT or Gemini for answers to their financial questions. There's some recent surveys that have been done that would say that over 50% of individuals in the UK are now turning to these tools for help around their finances. And looking just closely at Vanguard's, roughly now about 30% of the traffic to our site is coming from these AI agents. So it really is starting to take hold. And the thing that I'm encouraged by is, one of the things that we've always seen is investing and money types of questions can be laden with lots of emotion. People feel like they don't want to ask the dumb questions. They don't want to be judged for what they've done about their money previously. And these tools are making it really accessible for people to come in and learn a bit, to be able to ask the questions that give them a solid foundation. And they're getting better and better. And so, my belief is that in several years' time, you're going to start to see these tools become very central to how, particularly retail investors, think about learning more about finances, to thinking about how to get started and how to stay on track over the long run. We're excited about that because there's a huge gap in terms of access to good financial information.
I think that's the thing, that in previous attempts to try and grow the retail investment participation, AI wasn't there in the past.
Right.
It is now.
Yeah, and it is. If you look at there's a couple of studies that have been done more recently. If you look at what people are asking of these AI engines, questions about their finances is typically one of the top 2 to 3 questions that are getting asked of them. And so, I do think that that's going to be transformative. And if you get that coupled with other industry reforms, things like targeted support here in the UK, where people can come in and get a little bit of help for somebody like you and what would you do in this type of a situation, I think that can unlock an awful lot of the potential.
So the future does look bright.
I think it looks very bright.
Jonathan Cleborne, thank you for joining us.
Thank you very much. Appreciate the opportunity.